You spent hours negotiating the price of the car. You finally shook hands, you're exhausted, and you just want the keys. Then the salesperson says those famous words, "We're just waiting for the finance manager to finish up your paperwork." Welcome to the most important room in the building. As a former GSM, I've seen great deals on the sales floor shift once the back-end products are added. Today, I'm showing you why the payment is a psychological anchor and how to decode the menu and how to weigh value of the protection the products give you and the insurance you already have. Let's get to work. When you walk into the finance and insurance office, sometimes they call it F&I for short, the first thing they'll likely do is confirm your budget. They might say something like, "You were looking to keep your payment around $600 a month, right?" From the dealer's side, they're trying to expand your payment options. They want you to get comfortable with a slightly higher number so there's room to include a service contract or gap protection. If you agree to that ceiling of $600 before seeing the math, it's much easier for them to suggest products that fill in that gap between your real payment and what they've mentioned to you. So here's the counter move. Keep the conversation on base payment. Say something like this: "Hey, before we look at any protection options, I need to see the raw loan math and the best rate. I want to know what my payment is with no products. Once I know the starting point, we can talk about products that make sense for my lifestyle." This keeps the math transparent and puts you in control of the room and your budget. Now, it's very likely the F&I manager is going to slide a menu across the desk and it'll have 3 or 4 columns. They'll usually start with something like the Platinum package, and it has everything from service contracts, tire and wheel, windshield coverage, key replacement, paint protection, and others. Again, the behavioral sciences, they'll start with the most expensive option and then they'll move to a value package, and it feels like a bargain. This is called anchoring. Here's the strategy you need to remember. Every product on that menu is an individual choice with a negotiable price. If you actually want coverage, don't just accept that first number. You could say something like, "I'm interested in that service contract, but I'm looking for a price closer to the dealer cost. If we can adjust that, I'll consider it." Most fixed prices in F&I have more flexibility than you're led to believe. Now let's talk about weighing the actual value of these products. First, gap protection. This is vital if you're putting less than 10% down, because if that car's totaled out, the bank wants to get paid the full balance, not just what the car is worth. So gap will fill in that for you. Now you have to weigh that price against the peace of mind you get for not having to deal with that situation. Second, roadside assistance. Many dealers include this in their packages, but check your current car insurance. You might already have emergency roadside for a fraction of the cost. Finally, windshield coverage. Now this can be a big profit center for dealers, but here's the tip. I can tell you, call your insurance agent. If you have comprehensive coverage with a $0 or $250 deductible, a cracked windshield is already covered and you're already paying for it. So you don't need to pay the dealership for coverage you already have. You don't need that protection twice. You already own it. The best way to finish an F&I session is with the rate verification approach. So the dealership earns a small commission from the bank by setting up your loan. That only works if that loan stays active for a while. If you pay it off, they don't get that bonus. So here's what you can say. "I'm happy to use your financing today and keep the process moving, but if the rate isn't competitive with my credit union, I'm likely just going to walk over there and refinance in the next couple of days. If you can hit my credit union rate and give me a fair price on that service contract, I'll keep the loan with you and we can just do the deal." This tells the finance manager you know a little bit about how the business works, and they'll sharpen your pencil to ensure that your products are competitive, your rate is good, and that you won't leave. You get a fair deal and they get a clean, funded loan. Thanks for spending a few minutes with me today. My goal is to give you the confidence that you get a fair deal every time you walk on the lot. If this video helped you, please subscribe and share it with a friend. I truly appreciate your support. I'm Eric Smith. Thanks for watching, and I'll see you in the next one.